What if I told you that your biggest trading problem right now isn't your strategy? It's not the market, it's not your risk management, and it's definitely not the indicator you're thinking about changing. It's you, or more specifically, the version of you that was created by your last losing streak. Because losing streaks don't just take money from traders, they take something far more valuable: confidence. And once confidence starts disappearing, everything changes. The same setup suddenly looks risky. The same entry suddenly feels uncertain. The same strategy that made you money a month ago suddenly feels broken. Not because it stopped working, but because you stopped trusting it. And that's where most traders begin a downward spiral they don't even realize they're in. They start searching for a new strategy, a new indicator, a new mentor, a new system, when the real problem was never on the chart. It was happening in their mind. Maybe you've experienced it yourself. A few weeks ago, you were trading with confidence. You trusted your analysis. You followed your rules. You knew exactly what you were looking for. Then the losses started. One trade, then another, then another. And before you knew it, every decision became harder. Every signal felt suspicious. Every trade felt like a potential disaster. The strange thing is, your strategy may not have changed at all. The market may not have changed. Your edge may still be there. But something else changed. You did. An understanding that one truth might be the difference between staying stuck in a losing streak and finally breaking free from it. Because today, we're going to talk about a simple adjustment that many of the most experienced traders quietly make when their confidence takes a hit. A strategy so simple that most traders ignore it, yet powerful enough to rebuild confidence, restore execution, and help traders recover faster than almost anything else. It's called one-to-one risk-reward trading. And by the end of this video, you may discover that the fastest way to move forward in trading is not to push harder. It's to make trading easier again. Have you ever stared at your trading screen and felt like everything you once understood suddenly stopped making sense? Not because the market changed, not because your strategy stopped working, but because you changed. Maybe it started with a single loss. Nothing unusual. Every trader loses. You shrugged it off and moved on. Then another loss came, and another. Soon, what looked like a normal drawdown began to feel like something much bigger. The numbers in your account weren't the worst part. The worst part was what those losses were doing to your mind. At first, you didn't notice it. You told yourself you were fine. You told yourself you were disciplined. You told yourself that if you just kept executing, everything would eventually return to normal. But something had already changed. The trader who entered positions with confidence was now hesitating. The trader who trusted his setup was now questioning every signal. The trader who once followed the plan without emotion was now negotiating with himself before every trade. And that negotiation was costing him money. Not because the strategy was broken, because the execution was. This is the hidden damage of a losing streak. Most people think losing streaks are financial events. They're not. They're psychological events that eventually become financial events. The money lost in your account can be recovered. The confidence lost inside your mind is much harder to rebuild. And here's the dangerous part. Most trading advice completely misses this reality. When traders hit a losing streak, they're told to stay strong. Trust the process. Keep pushing. Keep executing. Don't change anything. And on the surface, that advice sounds logical. After all, if the strategy has an edge, shouldn't you continue following it? Yes, but there's one problem. The person executing the strategy today is not the same person who created the results before the losing streak started. That's the truth nobody wants to admit. You may be trading the same setup, the same market, the same time frame, the same risk management plan, but you're not the same trader. The confidence is lower. The conviction is weaker. The fear is stronger. The hesitation is real. And all of those factors quietly reduce the effectiveness of a strategy that was once performing beautifully. Think about it. Think. How many times have you entered a trade late because you hesitated? How many times have you moved your stop loss because you were afraid of another loss? How many times have you taken profits too early because you couldn't handle watching a winner pull back? If you've traded long enough, you know exactly what I'm talking about. And here's what makes it worse. The more losses you experience, the more likely those mistakes become. The more those mistakes happen, the more losses you create. And suddenly you're trapped inside a vicious cycle. A cycle where the losses damage confidence. The damaged confidence creates poor execution. The poor execution creates more losses. And every day that cycle continues, the deeper the hole becomes. Now imagine a trader who normally targets a 3-to-1 reward to risk ratio. He's used to letting trades run. He's used to sitting through pullbacks. He's used to enduring uncertainty while waiting for larger profits. That works perfectly when confidence is strong. But what happens when confidence is broken? Suddenly, every candle feels threatening. Every pullback feels dangerous. Every moment of waiting feels unbearable. And before long, the trader starts sabotaging his own system. Not because he lacks knowledge, not because he lacks discipline, 18, but because he's trying to operate a high-performance machine with damaged parts. That's when the smartest traders do something most people consider boring. They simplify. They stop trying to hit home runs. They stop trying to prove how good they are. They stop trying to recover losses quickly. And they return to something remarkably simple. One-to-one trading. Risk 1 unit. Make 1 unit. Nothing fancy. Nothing exciting. Nothing that gets posted on social media with screenshots showing massive gains. Just clean, simple execution. And here's why this works so well. A one-to-one setup only needs a win rate above 50% to make money. Think about that for a moment. A coin flip breaks even. All you need is a slight edge. 52%, 55%, maybe even a little more. That's it. The bar isn't nearly as high as your emotions are making it seem. And during a losing streak, that's exactly what matters. Because you're no longer trying to prove your strategy is extraordinary. You're simply proving that it's better than random. And if your strategy has any genuine logic behind it, chances are it already is. This changes everything psychologically. Instead of chasing perfection, you're rebuilding trust. Instead of demanding exceptional performance, you're looking for consistency. Instead of focusing on profits, you're focusing on evidence. Evidence that your process still works. Evidence that your edge still exists. Evidence that you're capable of executing correctly again, and every completed one-to-one trade becomes another piece of that evidence. A clean entry, a proper stop, a predefined target, no interference, no emotional decisions, just execution, then another trade, and another, and another. Slowly, something starts happening. The fear begins to fade. The hesitation becomes smaller. The confidence starts returning. Not because you forced yourself to feel confident, but because confidence was earned. That's the thing many traders misunderstand. Confidence cannot be manufactured. It cannot be created through motivational quotes. It cannot be built through positive thinking. Real confidence comes from evidence. Repeated evidence. The experience of following a process and watching that process produce the outcome it was designed to produce. That's where confidence lives. And when a losing streak destroys confidence, the only way to rebuild it is through new evidence. Not hope. Not willpower. Evidence. If you've ever gone through a painful losing streak, leave a comment below and tell me the longest losing streak you've ever experienced. I read every comment, and your story might help another trader realize they're not alone. And if you're getting value from this video so far, hit the like button and subscribe to the channel. Because what we're about to discuss next may completely change the way you recover from losses forever. Now, here's where most traders make a critical mistake. They understand everything we've talked about so far. They know confidence matters. They know execution quality matters. They know a losing streak can damage both. And yet, when the moment arrives, they still refuse to simplify. Why? Because of pride. Not the obvious kind. Not the kind that walks into a room and announces itself. The quiet kind. The dangerous kind. The kind that disguises itself as discipline. Maybe you've heard the voice before. It sounds something like this. My strategy works. I've tested it. I know it has an edge. If I reduce my targets now, I'm giving up. If I switch to one-to-one trading, I'm lowering my standards. If I stay disciplined and keep pushing, eventually the winning streak will come. At first glance, those thoughts sound reasonable. In fact, they sound intelligent. But sometimes the most dangerous beliefs are the ones that sound logical, because they prevent us from seeing what's actually happening. Imagine a professional athlete who injures his leg during a season. Would a good coach tell him to keep training at maximum intensity? Would a good coach demand that he perform at the same level while injured? Of course not. The goal would be recovery. The goal would be rehabilitation. AB. The goal would be restoring performance before demanding peak performance again. Yet traders often do the exact opposite. They experience psychological damage from a losing streak, then immediately expect themselves to perform at 100% capacity. When they can't, they become frustrated. When frustration builds, they force trades. When forced trades lose, confidence drops even further, and the cycle continues. What makes this particularly dangerous is that many traders don't even recognize the damage. They look only at their strategy. They look only at market conditions. They look only at statistics. But they fail to evaluate the one variable that has changed the most: themselves, the trader, the human being making every decision. The reality is simple. A strategy that requires high conviction becomes much harder to execute when conviction is missing. A strategy that requires patience becomes much harder to execute when fear is present. A strategy that requires emotional stability becomes much harder to execute when emotions are already compromised. The strategy may still work, but the trader currently operating it may not be capable of extracting its full edge. And that's okay. There's no shame in that, because recognizing temporary weakness is often the first sign of real strength. The strongest traders aren't the ones who never struggle. They're the ones who recognize when they're struggling and adapt accordingly. Let's talk about something most people never consider. What exactly are you trying to recover after a losing streak? Most traders immediately answer, "My money." But that's rarely the correct answer. Money is simply the visible symptom. The real damage lies beneath the surface. What you're actually trying to recover is trust. Trust in your process. 1. Trust in your analysis. Trust in your decision-making. Trust in your ability to execute under pressure. Without those things, recovering the money becomes extremely difficult. With those things, the money often recovers naturally. Think about a trader who loses 10% of his account. Then imagine two different scenarios. In the first scenario, he becomes obsessed with recovering the money. Every trade is measured against the drawdown. Every opportunity becomes a chance to get back what was lost. Every winning trade feels too small. Every losing trade feels catastrophic. His focus shifts away from execution and toward outcome, and that shift quietly destroys his performance. In the second scenario, the trader ignores the account balance entirely. Instead, he focuses on execution quality. Did I follow my rules? Did I enter correctly? Did I place my stop correctly? Did I respect my target? Did I interfere with the trade? Suddenly the pressure disappears. Because success is no longer measured by dollars. It's measured by process. And process is something he can control. That distinction changes everything. Professional traders understand this. They know that outcomes are influenced by probability. They know that even perfect trades can lose. They know that short-term results often tell a misleading story. What they care about is consistency. Because consistency creates expectancy, and expectancy creates profits. One-to-one trading becomes powerful because it reconnects traders with that reality. It removes much of the emotional burden attached to each position. The target is closer. The uncertainty period is shorter. The waiting is easier. The temptation to interfere becomes smaller. And every correctly executed trade reinforces the behaviors that produce long-term success. Think of confidence as a bank account. Every clean trade is a deposit. Every emotional mistake is a withdrawal. During a losing streak, most traders become so focused on recovering financial losses that they completely ignore their confidence account. And while their money account shrinks, their confidence account collapses even faster. Eventually, they reach a point where they no longer trust themselves. And once self-trust disappears, trading becomes incredibly difficult. Every decision feels heavy. Every signal feels questionable. Every loss feels personal. That's why rebuilding confidence must become the priority. Not someday. Not after the account recovers. Immediately. Because confidence is the engine that drives execution, and execution is what ultimately drives profitability. Now here's something fascinating. Many traders discover that their strategy never stopped working during the losing streak. Read that again. The strategy never stopped working. What stopped working was the trader's ability to execute it consistently. That's a painful realization, but it's also an empowering one. Because if the problem is execution rather than strategy, the solution becomes much simpler. You don't need a new indicator. You don't need a new mentor. You don't need a new course. You don't need to completely redesign your trading system. You need to rebuild execution quality. And one-to-one trading creates the ideal environment for doing exactly that. Every trade becomes easier to manage. Every target becomes easier to hold. Every completed cycle becomes easier to achieve. And over time, those completed cycles begin stacking on top of one another. 5 clean trades, 10 clean trades, 15 clean trades, 20 clean trades. Each one quietly sending the same message to your brain. The process works. The process works. The process works. Eventually, that message becomes impossible to ignore. The fear begins losing its power. The doubt starts fading. The trader who entered the losing streak slowly begins to disappear, and a new version emerges. Not because he became more talented, not because he discovered a secret strategy, but because he rebuilt trust in himself. And that trust changes everything. If this idea resonates with you, let me ask a question. Have you ever continued trading aggressively during a losing streak, only to realize later that the biggest problem wasn't your strategy, it was your state of mind? Let me know in the comments. I'd genuinely love to hear your experience. And if you've made it this far into the video, take a second to hit the like button and subscribe. Not because it helps the algorithm, although it does, but because this channel is dedicated to helping traders survive the psychological battles that nobody else talks about. And in the next part, we're going to discuss exactly how to implement a one-to-one recovery phase, when to start it, when to end it, and the specific rules that separate successful recoveries from endless cycles of frustration. Because knowing the concept is one thing, applying it correctly is what changes results.